What's up guys? In this video, I wanted to share my investment tier list, what I think is a good investment and what I think is not a good investment. And some of them are not really financial investment, stuff like education or buying your time, but I will go over that as well. And if you guys are new here, my name is Richard. I'm a yield farmer and investor. If you guys want to check out my crypto portfolio, I do make these portfolio update videos every single month. So be sure to check that out if you guys are interested. And I do help consult and manage a few private 8-figure funds in Asia. So I know a little bit about investing. And the plan for this video is just to go over the crypto investment first. Then we're going to look at the traditional finance markets. After that, we'll dive deeper into other assets like insurance or collectibles. I'll break down the pros and cons of each, how I personally allocate my capital, so that you can make your own investment decisions. It's really great if you guys can grow your portfolio really quickly with crypto. Let's say your portfolio go up by 5 to 10x, but you will lose money long term if you guys don't get the big picture right. And this video will focus mainly on big picture rather than like single assets like a specific altcoin. So let's dive right in. And before that, just a quick disclaimer, none of this is financial advice. I'm just sharing with you guys what I think about each asset class. You should be doing your own research and kind of think through all of these asset classes critically before you make your own financial decisions. So if we go from left to right here, the first asset class is Bitcoin. Bitcoin is simply S tier. A lot of people are accumulating Bitcoin because it's the first digitally scarce asset. You can prove that it's scarce. You can't just copy Bitcoin, right? You can't just like print a bunch of Bitcoin out of thin air. That's why it's able to hold its value. It's very secure. It's very decentralized, meaning that like a single entity like the bank or the government cannot censor your funds, right? If you want to send your Bitcoin, as long as you have access to your keys, through a wallet, you can send Bitcoin anywhere. The main argument against Bitcoin might be that it's very volatile, but in my opinion, volatility risk is not the same as risk of loss. If an asset is very volatile, meaning that it goes up and down all the time. If I pull up the Bitcoin chart here, you guys can see even if the prices are very volatile, if it's trending up and to the right, that's all that matters, right? Because if you bought Bitcoin even at the all-time high, if you held your Bitcoin over the periods of years and you didn't dollar cost average Bitcoin, it would still be up by a large amount, right? And another downside that some people argue against Bitcoin is that the transaction fees will not be enough to secure the network once the inflation of the Bitcoin stops, right? We'll see what happens at that time, but in my opinion, Bitcoin is still a really great asset to hold on to for at least the next 5 to 10 years. And the next asset class that I would separate from other altcoins is Ethereum. I believe Ethereum is still one of the best asset classes in crypto to hold long-term over the next 10 to 15 years. If you guys look at the DeFi total value locked here, Ethereum has pretty much retained its dominance since like the last bear market here. In 2022, Ethereum holds like 58% of the total value locked, and now it's even back up to 60%. In addition to a lot of layer 2s that are built on top of Ethereum, like Base, that is gaining more and more market share in terms of DeFi and the transaction volumes. So some chains like Solana might have more transaction volumes, but in my opinion, if you value security and decentralization, Ethereum is still the go-to pick. It has the most protocols and developers. It's still one of the most robust systems. And in my opinion, like a lot of banking services in the future will be on-chain, and Ethereum will most likely retain its dominance. So this is why I think Ethereum is an S tier. And some argument against Ethereum is that there's a lot of layer 1s like Solana, Sui that could be taking Ethereum's market share because Ethereum is a little bit slower and more expensive to transact on. But in my opinion, Ethereum is competing on decentralization and security rather than scalability. So I would still say that Ethereum is different from a lot of other layer 1s or layer 2s that you're seeing on the market today. I still hold a large portion of my portfolio in Ethereum. I think it's really good tech. It has one of the best tokenomics system in crypto. And the way Ethereum works is that more people using Ethereum would burn Ethereum. So the inflation rate is really low. If you guys look at the supply here, the supply has been largely flat. It's been about 0.8% per year, even less than Bitcoin. So in my opinion, the supply side is not an issue as long as the demand can keep up. And we could see that with the recent ETF inflows. So really solid asset to hold on to. And if you guys are yield farming or if you're investing into crypto, you simply must have some stable coins. That's because a lot of times holding on to some stable coins could reduce our volatility a little bit. And it's great for capitalizing on buying opportunities when the market dumps. When the market is really fearful, there's some negative news, you need some stable coins to take advantage of that opportunity. And the reason why I don't put it on the S tier is because stablecoin by itself, if you don't know how to use it, it's not going to generate enough returns, right? But of course, you could earn your yield in a lot of different forms, like yield farming with concentrated liquidity pools, which is what I focus on most of the time. Or you could do yield arbitrage, where you're basically finding higher risk or higher paying stablecoins, you're loaning those out and then borrowing out some other stablecoin that has like a low borrow rate, and then loop that process and try to get a higher return, right? So if you're generating a return that is greater than the inflation rate with your stablecoins, I still think that stables are a great asset to hold on to. And it's just really useful to use it in your daily life too, right? If you guys have one of those crypto cash cards where you could like load up some stable coins and then you can spend that, stable coins are really good in that terms. And this logo is Aave, but I'm just using it to represent altcoins. I think altcoins are pretty high risk if you guys don't know what you're doing, or if you're not that active in the market, you don't have time to research different projects, then investing into altcoins could be riskier. But at the same time, if the altcoin season rolls around, like what we're likely to see in the next few months, we can see Bitcoin dominance is coming down a little bit here. And typically when Bitcoin dominance drops by a large amount, that's when we see the altcoins run. And that's where we could generate a lot of return. I personally do hold a lot of altcoins as well because I'm a more active investor. I yield farm and then try to profit from that. But typically, I'm not trying to stack these altcoins for a longer term hold, right? Like for the next 10 to 15 years. We never know what these tokens are going to do. So when the prices are really good, when there's a lot of profit to be taken, we need to be more aggressive with the profit taking. So that's why it's not in this A or S tier here. And at the same time, there are a lot of altcoins to choose from. So you might be able to hit like a 5 to 10x on certain altcoins, but it's not going to be all of the altcoins that you pick, right? But overall, it's still worth investing in my opinion if you guys can generate greater returns than just holding Bitcoin and Ethereum over time. So the last crypto asset that I want to talk about is NFTs. I'm kind of torn between putting it in B or C. I think I'll put it in B. Stuff like CryptoPunk, and you guys might disagree with me here, but I basically got started in crypto from NFTs. That's where I made my first initial capital. It's similar to altcoins where if you go down to like the lower cap NFTs, they're really high risk, but potentially have a lot of rewards. And again, depending if you're an active or a passive investor, what you buy might be completely different, right? Stuff like CryptoPunks, for example, have basically gone up in value a lot recently because people are trying to get a higher multiple on their Ethereum because a lot of these higher end NFTs are on Ethereum. Stuff like CryptoPunks and Pudgy Penguins are likely going to be around for the next 5 to 10 years. So I do think that it is a decent investment if you guys can get in at good entries and also take profits on the way up. It's still very highly speculative and you can make a lot of money, but you could also lose a lot of money. I still hold a lot of these Sappy Seal NFTs. That's what I use as my profile picture because I do believe that they would go up in value, but at the same time, they're very speculative, as well as this Pixel Pets collection. They've rebranded to Omnia Pets, but they're launched by the same Sappy Seal team. I hold a big position in that. This will be used in their upcoming Pet Battler game, but at the same time, they're very high risk and potentially higher rewards. So I'm going to put it in this B tier. I'm tempted to drag this down to C because it doesn't earn a yield, unlike altcoins where you could deposit into liquidity pools. And there are just a bunch of other ways to earn more yield on your altcoins. But at the same time, NFTs is a great way to access a crypto native community. Stuff like Pudgy Penguins, Azuki, Sappy Seal. There are a lot of crypto native people that are pretty active in crypto. So if you want to get to know more crypto people, then owning some NFTs could be a great way to do that. You can't really join a community and get to know a lot of people using just altcoins. In my opinion, NFTs are still the best way to get access to those communities. But again, it's very high risk. And if you guys are not comfortable with like losing the money that you invest or a portion of it, then you probably don't want to be buying NFTs, right? The next asset class is the S&P 500 index, and you guys can buy VOO or stuff like SPY. They track the S&P 500 index, and that index is basically 500 of the largest companies in the US. In my opinion, it's an S tier investment, and I will share with you guys like the charts in a little bit here. But the reason why it's an S tier is because stocks is basically the most efficient way for a free market to accrue value, right? As long as those large companies keep making money, and in my opinion, they will keep making money. Companies like Apple, Google, they're likely to be around for a very long time. And the reason why I pick an index and not individual stocks is because a lot of times the outperformance of a single stock, similar to crypto, would fluctuate, right? If you guys don't want to actively trade stocks, then buying the index is very good, especially if you guys are taking yield farming more seriously or you're a serious crypto investor. You're not going to have a lot of time to actively trade like both markets. So in my opinion, just investing into an index like the S&P 500 index is really good. Again, even though it's more volatile than stuff like bonds, the risk of loss is very low compared to just even holding bonds, right? The next ETF is the QQQ. If you guys want to learn more about these ETFs, just go to a website like Yahoo Finance and then just put in the ticker, right? QQQ. You can see over the last 5 years, it has generated over 100 something percent return. Sometimes there is a bear market similar to how crypto has a bear market, right? But over time, this is still a really great investment. If you guys go to this holdings tab here, we can see that it's like 50 something percent tech stocks, right? NVIDIA, Microsoft, Apple, Amazon. So if you guys want tech stock exposure, QQQ is one of the best way to do so. And it makes sense to be in the S tier because if you guys think about it, a lot of the value that is created in the last 1 to 2 decades is actually by these like tech companies. They're able to have a lot of high profit margins as well as a higher speculative premium. So that's why it's in the S tier. The main downside again is the volatility, but we can easily reduce that risk by just dollar cost averaging into the index. And I recently heard like a pretty great analogy when it comes to the stock market. You can basically imagine that all of the smartest kid that you went to school with, either in high school or in college, now they're pretty much running these large companies that are making money, and their sole goal is to make more money for the shareholders because that's how they get more money themselves too, right? So if you want to bet on like the smartest people in the market, then buying these indexes are a really good way to do so. Now, this ticker is really good if you prefer more stability and more cash flow. So ACHD is a higher dividend ETF. What they do is they find companies with a strong balance sheet and good records of cash flow and dividends to make sure that we are able to get more dividends over time. And these companies typically grow in value over time as well. You can see here the dividend yield is pretty high, 3.87% for a TradFi product, compared to the QQQ, which only has 0.5% of dividend yield, right? Because a lot of tech companies, they reinvest their money rather than pay out dividend for the shareholders. So if you guys prefer more cash flow, then ACHD is a great way to increase your cash flow. And if we look at the long-term chart, it doesn't look like a bond chart, right? It goes up in value over time while you're earning yield on your capital. And you guys don't have to stick with HCHD. You can go with other higher dividend ETFs as well, like the VYM. And the reason why I don't put it in the S tier is because there's less capital gains. Even though it's likely to grow in value over time, it's still not going to be as good as VOO or QQQ if you're trying to have more capital gains on your portfolio. For bonds, I'm tempted to put C or D, probably D, is because it's just not a good investment. There's only one valid reason to buy bonds is because you're pretty much close to retirement and you need some more stability and more cash flow. You don't want to be selling your stocks if it's going through like a 30 to 40% drawdown, because if you're relying on stocks for an income and there's a bear market, if you sell those assets, your portfolio is not going to be bouncing back up as high as if you held on to those assets, right? So really that's the only use case for bonds. Bonds are basically the way governments or companies borrow money. And the reason why companies borrow money is because they could generate more return elsewhere, right? No one would borrow money if they can't generate a higher return. So by default, buying bonds, you're accepting lower return by taking less risk. But over a very long period of time, bonds are a horrible investment. And if there's a lot of inflation and you've locked yourself into like a longer term bond, your performance is just going to be really poor. Holding bonds are never worth it. Again, unless you're really close to retirement. Let's say you're only 5 to 10 years away from retirement, then maybe holding bonds could be a good way to reduce the volatility of your portfolio to prepare for retirement. And in my opinion, government bonds is just a great way for the government to borrow more money to spend, and then for them to basically inflate that debt away. They keep printing money. The bondholders, in exchange for stability, is actually losing a lot of wealth over time. So bonds are not a good investment in my opinion. And the next asset class is gold. Gold, in my opinion, belongs to S or A. I'm going to put it in A because I don't think it's as good as stuff like Bitcoin, Ethereum, VOO, or QQQ. Gold is a really good store of value because it's very hard to create more gold. People have been trying for, centuries to try to make more gold, but chemically it's not possible to like make gold because you need to basically change like the element. The process of actually creating new gold is very expensive. It's much cheaper to basically try to dig and find more gold. Gold inflation rate is very low compared to other commodities. That's why gold has retained its value over time. And in periods of uncertainty, gold performs really, really well. But there's a lot of downside with gold as well. For example, it's very hard to physically store and transport a lot of gold if you guys hold a lot of assets. Sometimes if you guys study like history, you would know that governments, when they really need money, they actually try to like take your gold away. So if you own a lot of gold and you don't hide it well, governments can come in and take it away. Same thing with real estate and stuff like that. It's pretty much impossible to like move a bunch of gold. So that's a major risk there. I don't want to keep all my assets in physical gold because of that exact reason. And this also goes back and reinforces the use case for Bitcoin as well. It's very easy to store Bitcoin and keep it secure versus holding like $1 million worth of gold, for example, right? And the next asset class is real estate. In my opinion, I'm mainly talking about investment real estate, not really where you live. In my opinion, it's not that great of an investment. I'm trying to put it in B or C here. I'm going to put it in C. I've actually spent a few years as a real estate investment analyst. In my opinion, unless you're a real estate professional or you're basically trying to do this full time, it's not typically worth your effort here. If you're a real estate professional, it could be an A or an S tier because you know what you're doing and you could earn a bunch of money. But if you're a passive investor, in my opinion, buying a bunch of real estate is just not worth it. You gotta deal with tenants, repairs, vacancy rate, management company. It's not very passive at all. At that point, you might as well spend your time to start a business or to work more to basically stack your investment somewhere else. It's just a really poor return, in my opinion, unless you have a lot of money. Let's say you're in 7 or 8 figure territory already. it could be great to basically diversify your investment into real estate because sometimes stock and crypto performance is going to be really bad, but real estate is still going to cash flow if you guys still could maintain your property and the renters are not defaulting, right? But the reason why I put it in C is because there's just a ton of issues that you could run into with real estate. And if you guys buy a property, you could still lose money. It takes so much time to like make a return and to also exit an investment if it doesn't go your way, right? So real estate, in my opinion, is just not a great investment. We'll take a look at charts in a little bit here. And the next asset class is commodities if you're buying and holding for long term, or if you're trying to reduce the volatility of your portfolio. In my opinion, commodities is not a great way to do so. For example, this is a commodities ETF. The ticker is DBC. You can see there's a bunch of stuff like gasoline, crude oil, gold, natural gas, soybeans, corn, wheat, sugar, copper, aluminum, zinc, silver. The reason why I put it in D is because a lot of these assets are not going to appreciate in value over time, right? If you guys think about it, will corn and wheat like grow in value over time by a lot? Probably not, because when the price spikes, a lot of times people would try to grow more corn or more wheat to basically meet the demand, right? And then the price would come crashing down. Similar to silver and oil, when the price spikes really hard, people try to find more oil and silver, and the supply just would spike up as well, and then the price would come crashing down. Compared to gold, it's just very hard to get your hands on more gold. So commodities is a D in my opinion. It just doesn't make sense to be buying and holding commodities. Now it's different if you're a commodity trader, but we're looking at this from an investment lens here. So it's a D in my opinion, or an F. So let's take a look at the charts here to basically prove my point. And again, you guys want to do your own research. Don't just listen to what I say. Think through it critically before you invest, right? So let's take a look at like the longer time horizons here. We're on the monthly chart and you guys can see like the different tickers and the different colors here based on the chart and the different percentage terms. So if I look at like the past 2 decades here, let's say we start from 2006 or 2005, we can see the different asset classes that have been outperforming in the last 2 decades. The first one here, the blue line, is the QQQ, which again is dominated by tech stocks. You can see a 1500% gain here. Really high because again, a lot of value was created by these tech stocks. So then the shareholders benefited as well, right? Tech is simply one of the most profitable industries just because it's much easier to scale, the margin is higher. And with the use of AI, these companies could generate even more return. Next up, we have gold. Over the last 20 years, especially the last 5 years, gold has done really well. You can see 600 something percent return over time. It works as a store of value for most people in the world. Even with the creation of Bitcoin, a lot of people still hold on to a lot of gold. So gold is really good here to hold on to long term over the next 10 to 30 years rather than the next 5 to 10 years. It's very hard to predict which asset is going to perform more over the last 5 to 10 years. You could argue that because gold has spiked so much, same with tech stocks, the future return is going to be diminished, right? But still really good here at 600 something percent. The S&P 500, 440 something percent. So over the last 20 years here, that's pretty much a return of roughly 20% per year. Really high because if you guys think about it, those companies' sole purpose is to generate more money and try to extract value from like the market to return the value back to shareholders, right? It's a very efficient system. That's why these companies have basically accrued so much value in the last 20 years. We see a lot of global companies like Coca-Cola is still around, right? They're still making money. They're still profitable. A lot of crypto investors, they don't own stocks. But in my opinion, if you want to be more diversified and kind of hedge your bets a little bit, buying stocks is really good. So I'm going to zoom in a little bit here because some of these ETFs are a little bit newer. Like this ticker here, ACHD, is the dividend stocks that I was talking about. These are not growth stocks, right? These are typically more matured companies They're still profitable, still generating cash flow for investors. It's still a great investment. You can see over the last 11 years, it's actually been able to keep up its performance against gold. Down slightly, but again, with the dividend stock, you're actually getting higher dividend every year. It's not factored into the share price. So if you compounded your return, let's say like 3 to 4% of the dividend yield per year, your gains would be higher than this 100% ROI, right? And even without the dividend, you can see it's actually been able to keep up with inflation. If you guys budget for like 5 to 7% average inflation per year, it's still doing really good here compared to stuff like bonds. Next up is VNQ. VNQ is a real estate ETF. That specific ETF also pays a dividend, but at the same time, you can see real estate has been struggling a little bit, especially because of higher interest rate. Usually it's harder to make a return with real estate when the interest rates are high because a lot of people are using leverage to earn more on real estate. It's just going to be harder in high interest rate environments. So 20% return over the last 10 years, not great. But again, there's dividends. If we pull up the VNQ here, you can see the dividend yield is roughly 3.89%. Buying this, in my opinion, is still better than like buying investment properties unless you're a real estate professional, just because you can spend your extra time to earn more money somewhere else. But what I want to highlight here is the LQD, which is a corporate bond fund. It has been like negative 8% return because of the higher interest rate. Bonds typically lose value when the interest rate rises. Even though it pays a decent amount of dividends, bonds typically lose money over time, especially if it's not generating at least 5% to cover inflation. That's why I put bonds at the D or even F tier. I don't think it's a good investment. And this DBC, which is again the commodities ticker that we were looking at, is this purple line here. It's sitting at roughly negative 17% return. So commodities, again, is just not a great investment. And we can put on like the Bitcoin chart as well. And you can see if you bought Bitcoin in 2014, you would be up a massive amount, right? But we can't go back in time and just like say, hey, let's buy Bitcoin at like $1,000. But if you guys see, even if you buy like Bitcoin at the peak of last cycle here, you would see you would actually be up right now against all other asset classes. That's why, in my opinion, Bitcoin is in the S tier, and we can put Ethereum up here as well. Ethereum actually has not been doing that well because, in my opinion, Ethereum is still lagging behind Bitcoin a little bit. So if you bought Ethereum at the previous peak, you're still down slightly. You're still outperforming commodities and bonds. But at the same time, if you bought like the near the bottom of Ethereum, you would be up compared to other asset classes, right? People measure like from the peak all the time. But in reality, if you guys are investing, you're getting an average price. So Ethereum, in my opinion, is still a really great asset, especially during the all season. If Ethereum catches up to Bitcoin, the returns would be much higher than what we're seeing, right? So those are the main asset classes here. And let's take a look at these other investments. So collectibles, they're very similar to NFTs, stuff like baseball cards and even watches and classic sport cards. If you guys have that niche knowledge and you are just really into that thing, you could still make really good money buying collectibles. But the thing is, you gotta spend a lot of time to know the market, right? But you might be already doing that if you're into collectibles. It's just not as scalable and reliable as other investment, in my opinion. That's why it's in B tier. But if that's like your bread and butter, it could be bumped up to like A or S if you know what you're doing. So this picture is supposed to represent investment insurance. What a lot of these insurance companies, either like annuities or other types of investment insurance, they promise you like anywhere between like 3 to 7% return per year. That is more stable and that is growing in value over time. Reduce the volatility risk of your portfolio. But the downside is you're typically underperforming the market by a huge margin. And it's very likely that you're also underperforming inflation. That's why I put it in D. Buying a ton of investment insurance, in my opinion, just doesn't make sense. it's the banks and those investment groups that are making the money, because what they do is they take your money and then go buy stocks and bonds, right? That's pretty much what they buy, or like private equity, to give you that steady return. So in my opinion, unless you really need like steady returns for some reason, like you're really sick or you're near retirement, then like this might be like C or B. But at the same time, if you want to build wealth or you want to like pass it on to the next generation, investment insurance is not good. But also, if there's some tax benefits, then it could be good as well. Let's say you're 80 and buying an annuity could have some like inheritance tax benefits. I'm not sure. I'm not like an insurance sales guy. Then that could be worth it. But in my opinion, in most cases is not a great investment. So this part here is also insurance. This is like health or life insurance. If you guys buy a decent one that has enough coverage for your life insurance and health insurance, in my opinion, that's an S tier investment. That's because we never know what's going to happen. We could be sick the next day or something could happen to us. And if you guys have dependents, like your wife or your kids or even your parents, then having some life insurance is a must here. You need to be able to take care of them, especially if they can't work for themselves, right? That's why I think health and life insurance is an S tier. It's still really good to buy, but just don't get scammed into like, something that bundles a lot of investment insurance into it and the premium is just absurd. The next investment is college. In my opinion, it depends on what you're trying to do. Let's say you want to go into engineering or you want to be a doctor or a lawyer, then that could be an S tier for you because you absolutely need to go through that. But if you want to be like a musician or an artist, for example, going to college is like a C or a D. Even software engineering, you could learn by yourself. But at the same time, you could argue if you're going to like better schools, like the Ivy League schools, the connections could matter. So then it's not really a D tier either, right? I would say it's a solid B. I'm one of those guys that don't like college, but at the same time, I can see the value in it for other people. I think a lot of college education could just be summarized and like, squeezed down to be really effective. It's just too much fluff and not enough substance, in my opinion. They're just trying to maximize the value out of you. I have a business administration degree from Oregon State University. I did the online program. In my opinion, what they teach is pretty good, but at the same time, like any colleges, there are some other useless classes that you need to take. And nowadays, there's a lot of information online that you can find rather than going to a traditional college. The next is spending time or money in online education, either through YouTube, online courses, or like online boot camps. In my opinion, it's an S tier simply because a lot of more niche knowledge like yield farming, you can't really get from like a college, right? I spend a ton of time watching YouTube videos because I find that if you find people that know what they're talking about on a specific topic, for example, I used to freelance part-time in art as well. I've made like almost 6 figures from art just by watching YouTube videos, spending time to practice my art, and paying for a few online courses. I think I've paid like $2,000 for like online art courses, which was pretty much worth like every penny. In my opinion, people are just too scared of like being scammed to like pay for online education. But in my opinion, it's still really cheap compared to stuff like college. I found that paid stuff most of the time is much better than free stuff simply because it's optimized for education, right? My YouTube channel, I try to maximize my value for education, but at the same time, I can't just like upload like 100 different videos on yield farming, like step-by-step guides and stuff like that to really optimize for like a structured learning process. You have to kind of do that with an online course because YouTube is just not optimized for that, right? And I'm not putting in S tier just because I'm trying to sell you guys a course either. I have a yield farming course that I spent like thousands of hours on and trying to launch in the next few weeks because a lot of people have been asking me about it. But really, I've spent like thousands of dollars on courses. Some of them are not worth the money, but at the same time, a lot of them are really, really good. This goes for like online communities as well. Sometimes some communities are really good. For example, I've joined a yield farming community before. It was pretty good when I got started, but in my opinion, there was still a lot of knowledge gaps and a lot of problems with like the strategies. That's why I started developing my own strategies when I run into these problems that not a lot of people are talking about, right? But in any case, online courses are really great. YouTube is really great. It's completely free. A lot of times we're not spending money for these investments as well. We're spending time instead, right? So just something to consider if you guys want to level up your skills. In my opinion, like spending more on your own education is really good. It's much better than college, in my opinion. The next is books. I like reading investment books as well as whatever topics that I want to learn more about. Books are a really affordable way to learn from other people's mistakes or experiences. You're basically limiting your potential by not reading books. But at the same time, it's not very helpful if you guys just read a ton of books and never apply them. So the way I personally like to read books is like either in my downtime or after I finish all of my work, then I start reading more books rather than like it being on top of my priority list before I get any work done. The next S tier investment, in my opinion, is just buying more time. Personally, I haven't spent a ton of time like hiring assistants and stuff like that. Maybe in the future I will. But one really simple way to buy time is just to use Uber Eats rather than cooking at home all the time. I still cook simple meals a lot of times, but I'm definitely not cooking every meal because in my opinion, I could make a better return on my time in other places. And it also goes back to the online courses as well. The reason why I buy some online courses sometimes is not because these information is not available for free. It's because a lot of the online courses, either on investing or on trading or whatever, they've already basically filtered all of the useless information and organized it in a way that's easier to understand and just save you a bunch of time. For example, if it's a $1,000 course, but it saves me a bunch of mistakes, and let's say it saves me like 40 hours of time, then it's worth a ton of money compared to what I've paid. And lastly, in my opinion, one of the best investment is just buying a nice computer or other things that help you work. For example, a standing desk. Anything that improves your work capacity, in my opinion, is a really great investment. It could be different for everyone, but in my opinion, if you guys are in crypto and you don't have a good computer, your computer is really slow, just buying a better computer would just give you much more return because you have a better tool that works faster and is just more effective, then you have an edge over other people, right? So let me know what you guys think about these investments. Again, I could be wrong about some of these investments. Maybe, for example, Ethereum is not an S tier if it just doesn't go up in price, right? But all of these are what I personally invest in. For example, I hold a lot of altcoins and Ethereum, some stablecoin, Bitcoin, VOO, ACHD. I would probably buy some more QQQ as well. Once I make more and more money from crypto, it's a really good index to dollar cost averaging, as well as some gold. So these are all of the investment that I would be focusing on for the next 5 to 10 years. So that video was a little bit more different from other videos. If you guys enjoy this type of content, then be sure to let me know in the comments so that I know that I could make similar contents in the future. And if you guys want to learn more about yield farming and investing, how I've been able to generate consistent returns with my crypto portfolio, then be sure to check out my channel. I try my best to put out good information for free, so hopefully I can help more people reach financial freedom. Thanks once again for watching. I'll catch you guys next time.